How bad is inflation? Gasoline up 50%, beef up 25%, lumber 38%. Think what that does to your earning power. Think what that does to your groceries. But also think what that does to your investments, to your own retirement, to every dollar you have in the bank. Did you know that clean water can be a perfect investment for these inflationary times?
Briggs, you recently wrote a fascinating op-ed for Newsweek saying a water shortage is coming and we aren't prepared. What's your plan to rectify that?
Well, we found a solution, which is to bring America's investors in to invest in water systems just like oil wells.
It's all about saving money by treating your own water. Clean water is getting more expensive, and so is the cost of treating your dirty water. Businesses are getting hit for sending that polluted water to the municipalities, the cities. The simple solution is to treat it yourself. More and more businesses are doing exactly that. To help these businesses, we invented something we call water on demand. Using this water on demand, we can help businesses save money on water inflation and deliver excellent returns for investors. How can investors benefit directly from water investment for the very first time? Water, like an oil well, is a perfect investment vehicle. Water keeps getting scarcer. Demand for clean water will grow and grow. And for the first time ever, investors like you and me can now invest directly in water systems, something that's never been feasible until now. How about an investment program that lets you share in profits from water on demand projects while also getting a long-term stock position in OriginClear, the parent company? Let us present the numbers. You will be astonished. And it's water, the most important mission we have on the planet, life itself. Well, hello, everyone, and welcome to the CEO briefing. And we have a very exciting one today. I think you'll enjoy it very much. And everybody's on deck, ready to show us a good time. I'll show you a good time, baby. All right. Well, we are October 19th. And let me tell you something. Behind the scenes, exciting stuff is happening. I can say no more. It's exciting stuff. Let me just put it right there and tell you exactly nothing. So unfortunately, for a few more days or however period it is, I'm even going to say it's days, we just kind of have to keep it on the down low. So that's the story there. All right, let's continue. The usual safe harbor statements. Billion-dollar disasters are becoming more common. Now, this is a big deal. Why? Well, last week I reported on the saltwater intrusion into New Orleans, which we are helping with by creating desalination containers that we're sending down to the Army Corps of Engineers. But let's take a look at what is going on over the whole picture. All right, so here we have a graph from Bloomberg, so Katrina in 2005 was huge. And then, of course, we had a peak in 2017. 2022 was the third most. But the bottom graph is the number of them, and that is steadily increasing. So now, what is the biggest category is severe storm in terms of numbers. In terms of dollar loss, tropical cyclone, i.e. hurricanes, are the biggest in dollar value. But in terms of frequency, we have the light blue is flooding, the very light blue is freeze, the teal, I guess you could say. The red is wildfire, which has been a tough story. And the estimated cost of damage in 2023 is CPI adjusted. Cost for inflation is adjusted. So what does this say? Well, let's get a comment from CB Insights, which is an excellent newsletter that I recommend. Go to cbinsights.com. So number of billion-dollar disasters trending up. In 2023 so far, the U.S. has already experienced more of these disasters than any year on record. The frequency of these events isn't the only thing. Cost has climbed. So these things are getting more and more expensive. And now weather risk intelligence is becoming a business. Well, of course, this means a lot in terms of every one of these relates to water in some way. And so we're kind of at the intersection of all these disasters. So Tom Marchesello had some interesting comments about agriculture and the labor problem. So right now, he observed that current economics and Bidenomics seem to be strange. Why? Why is there a flood of immigrants into the southern border? Well, his logic is that he thinks that the U.S. needs more migrant labor to do more agriculture so we can get back to being a net exporter. That's a good piece of logic, but let me get to the point here. For the first time in history, we're at the risk of being a net importer as China is reducing purchases. We lost over a third of farm workers in the United States. A new influx of migration is to bring more agricultural workers faster. But here's my question. This is me, this bottom one. Will they work on the farm? Not so sure. I think that the classic migrant worker who works in the farm is a different breed than the kind who are coming in to basically get an economic benefit. But we shall see. I do think that part of the calculus by the current administration to let people in floods is to remedy the problem we have, which is underpopulation. I don't think it's the way to do it, but I think is the logic of it. So for agriculture to grow, it needs water. And there's a story about agriculture demand that should grow rapidly over the next 10 years. And Tom will develop this story further. Tom has a background working in finance, and he, I'm sure, will have more to tell about this. Crude oil, well, it took a turn upward in the last couple days. BZ is Brent crude. That is the northern UK oil. And CL is West Texas Intermediate crude oil. And they're pretty close to each other. But what we have them both up, rising pretty steadily since the events in the Middle East have occurred. And I think this uncertainty is going to continue. What does this mean? Well, I think it's eventually, you see what the problem, okay, invest in oil, great. I'm in the oil ETF because I think it's smart. My wife's 401k is partially in USO, which is a oil ETF. But what does it mean for the overall economy? Well, it is anytime you raise the price of oil, we saw that starting in 1973 with the oil crisis, you hurt the consumer economy because it takes money from disposable income. And so this is not going to be a pretty sight for the economy, which is primarily a consumer one. So what does that mean? It means that, again, the stock market is a crazy place to be right now, unless you're trying to figure out how to short it, which I'm not that smart. And gold, well, gold is its own thing. Oil seems smart. But in general, there is a business risk. And of course, as we know, the Fed just today said that they were going to raise interest rates even more to tame inflation. Not wise, in my view. Mortgage rates are hitting 8%, but it is what it is. I guess what I'm trying to say is water, which has not been priced with the market, it's been priced out of the market because it's been a government monopoly, is a logical way to go. Now, here's an interesting story by Sam Altman, OpenAI CEO. OpenAI is the source of ChatGPT. I think they have a $36 billion valuation, something like that. Smart guy. And he was interviewed on Joe Rogan. And he had an interesting thing. So I'm going to go ahead and jump over to Joe Rogan and play this. And I think you'll find it's very interesting. I'm just going to play it for a few minutes. Not the 3 hours of a standard Joe Rogan, for sure.
Like, I want us to continue to strive. I want us to continue to push back the frontier and go out and explore. And I actually think something's already gotten a little off track in society about all of that. And I don't know. I think, like, I thought I'd be older by the time I felt like the old guy complaining about the youth. But I think we've lost something, and I think that we need more striving, maybe more risk-taking, more like explorer spirit.
What do you mean by you think we've lost something?
I mean, here's like a version of it very much from my own lens. I was a startup investor for a long time. And it often was the case that the very best startup founders were in their early or mid 20s or late 20s, maybe even. And now they skew much older. And what I want to know is in the world today, where are the super great 25-year-old founders? And there are a few. It's not fair to say there are none, but there are less than there were before. And I think that's bad for society at all levels. I mean, like tech company founders is one example, but like people who go off and create something new, who push on a disagreeable or controversial idea, we need that to drive forward. We need that sort of spirit. We need people to be able to, put out ideas and be wrong and not be ostracized from society for it, or not have it be like, something that they get canceled for or whatever. We need people to be able to take a risk in their career because they believe in some important scientific quest that may not work out or may sound like really controversial or bad or whatever. Certainly when we started OpenAI and we were saying, we think this AGI thing is real and could be done, unlikely, but so important if it happens. And all of the older scientists in our field were saying, those people are irresponsible. You shouldn't talk about AGI. That's like, they're like selling a scam, or they're like, they're kind of being reckless and it's going to lead to an AGI winter. Like, we said we believed. We said at the time, we knew it was unlikely, but it was an important quest. And we were going to go after it and kind of like fuck the haters. That's important to a society.
All right. Well, that he goes on to talk about, whether it's biological factors or whatever. That's a whole other part of the conversation. But here's what's going on. The last thing he says is about how Sam Altman had to overcome the old guys. And I don't think it's about age, because hey, I'm old, right? I'm not a young chicken, but I think for a long time I've been an outside the box kind of guy. Some people would say way too much, but I've learned to work within the system in the decades that I've been in the system. But what I've confronted all this time has been the quote unquote old guys, the existing, the conventional wisdom, and how to deal with these people. We are planning to do a major acquisition program, which is going to dramatically, we believe, is going to dramatically transform the company. And of course, we can't guarantee any of this is going to happen. I have to say that. But the people that we bring in, they're going to be generally like, well, I don't know. Well, what do you mean? I don't know. And so that is part of the fight. And I was debating somebody on Facebook today who was a Democrat, and he was like, he was criticizing Republicans for being all, a bunch of rowdy, basically being broken, whereas Democrats are all like one block. And I said, advancement does not come from consensus. It comes from a small group of people who defy the consensus, right? And I haven't gotten back to the argument we're having. It was a very friendly one because we are friends. Yes, I have quite a few Democratic friends. I just want to say that. And the important thing to remember is that there is always the weight of what already is that is getting in the way of progress. Now, Sam was commenting about the age and about the ages skewing older. And what does that mean? Well, first of all, I think it's too bad because we need a newer generation to come up. Secondly, when you look at what's happening in the water industry, we have what's called a silver tsunami, which is over 7 million jobs becoming available that it won't be filled. These are older people, so the young people presumably will move in, but they won't move into municipal jobs. They will move into the decentralized, privatized systems that we've been promoting. So I guess what I'm getting to here is that there's a whole new generation of water treatment that skews young in attitude. It will attract young people. It will be about a brand new model. It is starting to get acceptance. I mean, I was pushing decentralization in 2016 and nobody was listening. Fortunately, we had some investors listening, and for that, I'm grateful. So what I'm saying is that we are, like Sam Altman, overcoming the consensus. And that, I think, is something that I want to discuss a little bit later when we get into the freewheeling discussion. Let's continue with a little excerpt from a podcast. I'm going to start shortening the briefings a little bit because I want them to be easier for people to schedule. So let's go ahead and run a podcast now, and then we will get to the freewheeling discussion. Here we go. This is Escaping the Drift Part 2. Remember, we had John Gafford Part 1. Very smart investment, I think real estate investment out of Vegas. Let's see what his new questions. It's a really, really good podcast interview.
I mean, is this just business, or is this something you see, at some point the individual home has one of these systems to try to reclaim the water that they're using in a home?
Well, it makes a lot of sense. We don't work in that space in part because, hey, remember, it's only 10% of the market.
Sure.
But let's take a look. There's a very concrete example in Miami-Dade County, which was built without much urban planning at all. And so they just sprawled out, and they have over 100,000 septic tanks in the county.
Oh, boy.
And it's very low-lying ground.
Is there still
so
that many
these
septic tanks there? There still is?
Over 100,000.
Oh, wow.
These things are sitting in basically a swamp.
Yeah.
And so they're right above the water table, and the water table is rising for various reasons. And so we're ending up with poop on the lawns and that kind of horrible stuff. And this is very affluent neighborhoods are all of a sudden being invaded by this stuff. So the county goes, okay, we'll spend billions to connect sewage. Like, well, yeah, you'll spend $8-10 billion, 20 years of tearing up streets. Even after that, the homeowner has to spend, $20,000 for the sewage connection. So why not just give them a $20,000 rebate?
Yeah.
To go ahead and do their own closed loop treatment. And there's viable right now. Fuji Water has a very good closed loop black water system, as they call it, and it goes into a tank, and once a year it gets pumped out by a truck. Because it's
you have to pump it at some point.
Well, eventually, but most of your black water is 99.9% water, right? The solids is very small percentage. Typically once a year is plenty. So now you've got a completely self-sufficient system. Of course, that can also be reused for irrigation. I mean, when we were in Los Angeles, I was hearing about people with $12,000 a month water bills for their homes. Now, granted, they were in Bel Air, so these were big homes, but still, that's a lot of money to spend on water.
Yeah.
So if you're able to recycle, then it's a win. And frankly, we've got to start recycling. People go, oh, well, why don't we just get our water from the ocean? I'm sorry, that is not an easy solution.
Yeah. Desalinization is very expensive. They haven't quite figured that out.
It's also environmentally difficult. Like, for example, in Huntington Beach, they worked for a decade on a desal plant, and then the state canceled it. Like, that's not very encouraging for the next company wanting to fund a desal plant, right? It's like,
is there an arms race? I would think there would have to be a current arms race trying to solve that problem. Yeah, to get it to be, environmentally and economically, viable. I think there's the
Israelis have gotten the price down to about $800 an acre foot. An acre foot is 1 acre, 1 foot deep, and that's good for about a family of 4 for a year. That's about what a household of 4 people will use in a year. You guys in Vegas, I think, are doing better than that, but that's in California. That's what it is. Well, the lowest price for an acre foot, Colorado River water, is $25 an acre foot. The desal plant in San Juan Capistrano is $1,350 an acre foot. So that's a vast increase. Whereas the Israelis have it down to about $800. So they're working on it. There's ways, but there's issues. For example, what people don't realize, when you desalinate water, your reject water is very heavy brine, right? And so now you're doing all kinds of ecological effects on the ocean. Hot.
Back in.
It's like the Great Salt Lake, but hot.
Yeah.
And it's all just pumping out. So there's issues with that. There's actually, I saw a proposal once, kind of a cool one, to take water from the ocean, pump it all the way up the I-80 slope of the Sierra Nevada to Tahoe, and pour it onto the Mojave Desert and let it percolate through the desert. So all you got to do is the pumping expense, right?
Yeah.
And you just wait 10 years because it percolates through the desert, leaves the salt behind, and you get fresh water.
It's probably better than, because the desert's the desert anyway. It doesn't matter how much salt you throw out there. It's not really relevant. Doesn't matter.
Right.
All right. So for you guys, the play for anybody that might be listening is the possible investment in the privatization of these things with the industrial stuff, not the personal stuff. So Obviously, you have to be an accredited investor to deal with this. There's probably no question there, I'm guessing, right?
We occasionally do crowdfundings. We just finished a Regulation A offering, which is for, as you know, anybody. There's a limit, like 10% of your annual income kind of thing.
Are you doing like fund funding, or are you doing individual, like, are you just saying we're going to do a fund to capitalize a certain number of these things? Or are you doing individual raises for individual assets?
Right. A really good question, because early on we wanted to let people invest directly because, for example, there's depreciation benefits, right? The problem with that is that there's huge regulatory burdens and it varies by locality, et cetera. So what we decided to do was take more of, the MLP, the Master Limited Partnership in oil, uses a basket of properties.
Sure.
And what's good about that is they kind of offset each other. So there's pipelines and there's gas properties and oil properties. They're all in one. And that means that if one is doing better than the other, they kind of balance out. So we're using that basket approach. And so people are funding
into a pool of assets.
Exactly. It's a pool. It's a capital pool. And then we pay, 20% of the net profits come out of it as an ongoing royalty. And they have lien rights to enforce that royalty. So that's pretty powerful. One thing that makes it really attractive right now is this is early days. As I said, it's very early for water on demand. In fact, I think the percentage is 25%. It's still a risk investment. And so they get a very large equity participation in the company, right? So that's where it starts to become interesting. They get a good equity play, they get a royalty play, and it's secured. The royalties are secured by the asset. And water is very stable. It doesn't go through ups and downs. Demand for water is pretty continuous.
Well, what happened? Let me ask you this. What happens if in the pool is my investment in the Bud Light plant, and then they decided to make some ill thought through marketing attempts, and all of a sudden now the plant closes and we've attached a water filtration system? What happens then?
Anheuser-Busch is not going out of business.
True.
Right. So they're not going to stop making beer, but this is why you have multiple properties in the one basket, right?
Well, no. Do you take the equipment and repurpose it somewhere else if this happens? If there's a
great questions, because our technology is mobile. It's a rent-a-center model. You stop paying. Thank you. We'll come back with our semi, pick it up, take it away. We can do that. We can repossess, which a lot of water models can't, because they tend to use the in-ground building that they build like a house, right? Whereas we build more like a mobile home. And so we can take it away. Yes, they have a long-term service contract. We obviously make sure that they're legit and they're solid companies because we don't want to risk our principal. But we also retain ownership of that asset, and we can take it back in case there is, the business goes belly up.
What's the lifespan of a unit? So if I put a unit in, what's the lifespan?
True. The service contracts are much shorter than the lifespan. The lifespan is at least 50 years.
Okay.
So typically the service contracts with individual customer are 50-year contracts. It's about as far as you want to go. And then we just roll them over. Our technology is for these high-density plastic envelopes for the water systems that are warranted for 50 years, and they actually last up to 100. And that is a big motivation for facilities owners, because what they love is the fact that we take care of everything. It comes in as a box. And so all you need is a regular janitor on premises. You don't have to have a water expert to run the system. Mm-hmm. So this is good, right? It just comes in, literally gets dropped on a pad, the water and electricity get connected, and it's running, and we've taken care of everything.
So it's got a 50-year lifespan. It goes in a pool for investment. Is there any additional, what's your depreciation table on these things? You just do standard depreciation, and you do accelerated depreciation? Like, is there a tax advantage to doing this because it's environmental?
As you know, you can take accelerated depreciation.
Yeah. Do you is my question. Do you is my question.
That is certainly the plan.
Okay.
Because that'll return right into the fund, right?
100%. Because
the investor can't take it individually. Mm-hmm. So what we set up individual corporations that each have this basket of so whatever depreciation benefit is incurred by that corporation goes right into the top line revenue, right?
Sure.
It gets back. And so it's a virtuous circle. So that does work. It doesn't work individually for the investor because we've pooled it, but it works
for the overall profitability of the fund.
Absolutely.
Okay. How many of these funds have you done? Or how many pools, I guess I should say, have you done? What's your standard cap raise for one of these pools?
This is the first generation, because I remember that we've been doing standard, design and build, as we call it, and people pay for it, and that's the end of that. But now we go design, build, own, operate, DBOO, and that's the full scale. And this is our first generation on that. We opened a $20 million accredited investor raise that we've raised about close to $8 million so far since 2021. So it's growing nicely. And, we're keeping the money working while we qualify the pilot deals. So as I say, the biggest challenge is finding these people who are not yet on the radar, right? They have not yet said, I'm ready for a water system, because they're not. They haven't figured it out.
One of my favorite sayings in business is there's only two things you can really do. You can find a problem that people have and find an ingenious way to solve it, or you can come up with a great idea and then have an ingenious way to market it. It's really the only two options you have. So innovation and marketing are both the same things. How are you actively marketing this product to potential clients and doing this? How are you building awareness?
So we went through a big learning experience where we tried going to because we have, at any given moment, we have, $50 million worth of quote backlog, right? People working their way through the quotation process. And so we would, hey, you don't have to pay up front for it. Universally, like, no, we're good. Why? Because, as I said, we were getting to them too late, right? They'd already entered the bid process, so they had already fixed all that. Mm-hmm. So what we're doing is a balance. We're staying with that business, growing it. It's growing fast, and we like it. We certainly don't want to stop. It's a good business. And then, meanwhile, the plan is for us to talk to consulting engineers. These are the very first people that, let's say you own a business, it's a bottling plant, and you want to solve your water problem. The very first person you'll talk to is a consulting engineer. This is a person who represents you. This is the architect, right? And right now, what we've started to do is to go to the consulting engineers and give them the option so that they know next time they talk to a client. So what we're doing is really, we're laying the ground for these newbies to come along. And this is the second generation of decentralized users who don't have capital, because you don't want to just deal with the people who have the ready cash. That's a limited market. You want to deal with the people who've not, like Ford, before they figured out being able to pay on installments, they were selling cars, but then it just took off once they figured out doing the installment payments.
Yeah.
So you have a business and it's good, but it's dwarfed by the potential if you can offer the financial.
Are you trying to handle those leases internal? Are you trying to fund that yourself, or do you go to a third party finance partner for that?
Right now, all we're doing is taking the investor's money and funding the
and then that becomes the return, because essentially what you're doing is you're a hard money lender for these hard units.
Amen. That's exactly right.
Question, because I always believe that data drives the world. And you said that it's advantageous for local public works to get some of these larger offenders, if we use them, that are large wastewater offenders, off of their grid. How open are the local municipalities, or have you guys looked into it, to getting their data as to, okay, who would you most like to have kicked off your grid? I mean, are they open to that kind of conversation? Have you guys gone down that road?
Yes. Well, that's a push approach. I'm a big believer in pull, meaning go with the demand versus like who out there is a potential victim versus people knowing they're a victim and raising their hand. So I think that's a good angle. It's a bit biz devy in a sense that you're going to have to go out there and
you got to shake hands and kiss babies. There's no question with that.
No,
you're not going to call the 800 number and they're going to give you the information over the phone.
It's a political process.
Yeah.
And we've considered political process to be a black hole because, we're not Veolia, we're not American Water Works, we're not these multi-billion-dollar companies that tend to dominate the lobbying in Tallahassee or in Reno or in Sacramento, right? So we've stayed away from that. But I think that's a good third wave. So first wave is the current demand, which is booming. We have as much business as we can handle. We're manning up our personing up our staff as fast as we can. Second wave is this water on demand, pay for gallon thing, which is going to be, I think, huge. Third wave is going to be looking for the violators through the lens of the municipalities and reaching down in there and going, hey, did you ever think of?
Those are best targets.
And I think that's a longer sell, but I think we'll get there. We'll get there.
So if anybody wants to find you guys and look more into doing privatized investing into water stuff, how do they find you? How would they find you, Riggs?
Very simple. OriginClear.com, and top right there's a green button, Invest Now, and you'll be walked through it, and you'll get to talk to the co-creator of this water on demand program, Ken Berenger, who's brilliant. And he will walk your, right now you have to be accredited. We're in between the crowdfundings, so it's accredited only, meaning that $200,000 a year minimum, $300,000 with your spouse, or $1 million assets excluding your primary home.
But do you have a mailing list that you're building for people non-accredited when you do crowdfunding?
100%. Okay. Here's what the people do.
So you're not locked out if you don't have those numbers. You're not locked out.
My personal estimation is I'm going to restart our Regulation A offering first of the year. We just turned it. We had it going until the end of April, and then we decided to pause it. We're restarting on the 1st. So come to our site. Now, I do a Thursday night CEO briefing. We are the most transparent public company in America. Every Thursday, I lay it on the line at 8 p.m. Eastern, 5 p.m. Pacific.
I wasn't aware that you guys were a publicly traded company. I thought you were privatized. Publicly traded company.
We've been public for
what exchange you trade on? What's the signal? What's the symbol?
We're OTC. OCL.
OTC. Got it. All right. Well, I have one more very important question for you, and you have to decide. And you've lived in Florida now for how long in Pinellas County? How long have you lived there?
It's 2020.
So it's 2020. So you've been there 3 years, long enough to realize that college football is religion in that part of the world, and that's where I'm from. So I'm not saying this. I'm saying I'm not. It doesn't even matter where you went to. You cannot pick your alma mater. That's not fair. You have to pick a Florida team. Pick one Florida college football team you have to root for. Who's it going to be?
Wow. Since I literally don't watch any spectator sports, I'm strictly a skier and a sailor.
You've got to pick one.
The Seminoles. There you go.
God bless America, my friend. This podcast goes on the air. That is, for those people that listen to this, they know that I love Florida State football as much people have the capacity to love a human baby. And yeah, good answer. Good answer. This will get on the air now because of that answer. But I thought you were gonna crap out on me and give me the Bulls there because you're in Tampa or close to them. But there you go.
Oh, no,
good
no.
answer.
I like Florida State.
Good answer. Good answer. Good answer. So again, if you want to look into investing in some off-market water, just the next cutting edge of stuff, you can find Riggs at the site that he said. One more time, Riggs. What was it?
OriginClear.com.
That's it. Okay.
And just click on the Invest Now button.
Yeah, man, it's a changing world. The world is constantly changing resources, everything else as they go. So the faster you can be an early adopter of what could potentially be next, that's it. But of course, as always, I am not giving any type of investment advice. This is not investment advice. I am not a professional investor. I just try to expose you guys to as much as I can. So there you go. Thanks, Riggs. I appreciate you.
John, it's been a great pleasure, and I appreciate it.
All right. Have a great day.
I thought John asked some really fantastic questions. Very, very interesting. And one reason why I run these podcasts is because each one of these interviewers, gets something else out of me. So it pulls this, pulls that, and I'll probably tell some story from being in the South Pacific sometime. But it only depends on what the podcaster asks. They kind of have to know that I was in the South Pacific, but that's a whole different story. All right. So with that, we are going to move into the freewheeling discussion.
It's the best part of the show. So Riggs, I hear that there's this opportunity to talk about when you were in the South Pacific.
Every one of you guys has the same background. What's up with that? Before I go on, James Wright had a comment about I had said that you could pump the salt water up into the Mojave Desert, and he says the desert does matter. Just no one has extrapolated the effects of adding that much salt to that ecosystem. I think we would add it only to not the whole thing, to there are salt lakes up there, right? And so you would put it in a salt depression that already had, 100 meters of salt in it. But no one's going to do it anyway, so we can just...
Right, problem solved. So what I was saying, and that I like, so I really like his interview. I love it when a guy intuitively gets the idea. Mm-hmm. He was able to kind of almost finish sentences. He asked all the real smart questions, like what happens if, the Bud Light plant goes out of business? You pack it up and take it away. Mm-hmm. But I always appreciate when a guy like that because he immediately, look, we knew, Riggs, we knew we were okay and we knew we had lightning in a bottle when we started describing this to business owners and businessmen. And just a few moments into the explanation, they were like, okay, and they were like finishing our sentence because it was intuitive. It made sense. You know, he said, you either come up with a great problem-solving idea, right? Something totally innovative, or you learn how to market real well. I really feel like we've now accomplished both.
You have to do both.
Yeah.
It's not true that if you build it, they will come. That is so not true.
It's not true at all. I know.
Where'd that idea come from?
Right. If you're playing baseball,
well,
a bunch of dead baseball players.
Well, ghosts are attracted to stuff.
Yeah, they are. I agree.
But we're trying to market to real people. Which brings to mind the Sam Altman interview, which was very interesting. Overcoming consensus, overcoming the way things are, and so forth. And what you have is a term called the Overton window. And the Overton window is the minority view that it's the dominant view, but it can be shifted by a minority. That's the interesting thing, right? Mm-hmm. So it's like Overton window is the way things are accepted. And then you get a force. For example, good example, the Bolshevik Revolution was engineered by a very small group.
Yep, absolutely.
As was the Hitler.
Yep.
They were both tiny, tiny groups. Now, in a more positive way, what Sam Altman did was he got the funding together to make it happen. And at the time, you had Elon Musk behind it. It was supposed to be a whole open source thing, which because of the need for funding, they ended up being backed by Microsoft. But the early important funding was done by people like Elon, who are inherently disagreeers, right? Mm-hmm. And so Elon,
contrarians, right?
He moves the Overton window, and I think that this is very relevant to what we're doing here. What John Gafford was talking about really was, how are you going to change the model? And he was like, well, do biz dev and this, that, and the other thing. What I was describing was a nibbling approach, right? Currently, we have the people who must have it.
Right. Immediate, urgent, desperate need. Right.
More than enough business for us.
Right.
We're frantically trying to staff up for that. And then we start nibbling away at the people who would like to have it if they had the shot, right. Or don't realize they could have the financing. And that's a different game. But again, it's not going to be done by calling a bunch of clients. It's going to be done by networking with the consulting engineers out there, of which there are, 5,000 in the U.S.
Right. But they're controlling billions of dollars of installations, right? So if you make that cohort, if they truly understand the value you bring, because look, consulting engineers are like everybody else. They have a book. They have a book of business. 10% of their book is the guys they make money off. Mm-hmm. And the other 90% are the guys that they kind of chase and they keep in tickler files because they don't have the capital to put together, right? It's like any other business, okay? If you can access the 90%, you're going to crush it. Your business will crush it. Right. So being able to essentially introduce this in the first conversation does crack that code. Now, what he was talking about is going out to municipalities and discovering areas where you had a solution to a problem they didn't know they had. Okay, or solving a problem that wasn't keeping them up at night. That's absolutely at least stage 3, right, or more, right? Because we could have a multi-billion-dollar company and never get out of the immediate, urgent, and desperate need category, considering that we're failing at $100 billion a year of our existing infrastructure, right? So this great urban. This great Excerpt migration is gonna fuel that too, right? Yep. You're gonna have more and more areas that are gonna be taken up that they don't have a decade to build. I think that's the most exciting part. I think land developers ultimately, who I think will attach onto this very, very quickly, are people who develop land professionally. I still have that 50 acres I want to buy.
Well, so one of the most exciting things about that Sam Altman interview to me was that shifting the Overton window is more possible than it has ever been because the internet connects more people together than ever.
Right.
The exciting part about that is that if you can be persistent enough and strategic enough and how you get your message out, then people can start to take hold of that. The other part of that that's interesting is due to this big migratory effort, you're going to start to see more pain, right? People are very comfortable, right? Everything is status quo until you're Flint, Michigan, and then all of a sudden everyone starts caring about their water, right? Or until you're burning, a tipped over train in Ohio and your rivers are looking like they're glistening rainbows, right? Like, these are the types of things that people are going to start to experience the more densely populated these areas become, the more they're starting to feel this water infrastructure, and it's going to naturally become a larger part of the conversation. The cool thing that we have the opportunity to do now is to continue to further that conversation early, right? Yeah. And that is what's so key. And for those of you that are listening or that have been on these CEO briefings or are watching this on YouTube or whatever, and you go, you know what? I'm listening to that podcast and maybe I'm not the person that is ready to invest from an accredited perspective. I'm waiting for that crowdfunding opportunity. You are still vital to the understanding that water is a problem, right? Getting that message out is so crucial. That what we're doing, yes, is trying to incubate companies and be successful in that endeavor. Yes. But there is a more pressing issue that we're attacking.
Mobilizing the troops.
Water infrastructure. And don't be afraid to shout that from the rooftops. That's not just something that helps us out. It's something that needs to be said so that more movement happens in this area, or we're in for massive issues moving forward, greater than what we already are.
Speaking to that subject that you're talking about, the person who's not yet in a category where they can take advantage and they're waiting for you are what creates virality, right? So moving the Overton window used to be like our founding fathers were that tiny minority of people who weren't going to sit with the status quo. Now we can go back in history and talk about extraordinary human beings at extraordinary times. It's actually easier to leverage and move that Overton and move public opinion through virality and communications online. We've recently brought on Josh, who's going to help us get that message out to the masses and create that viral involvement in the big picture, right? Even if we can just look, the fact that you don't have to be a business school graduate to understand what we're trying to do, that's 90% of the problem, right? Now that the average guy can look at what we're doing and say, why didn't anybody think of this before?
Well, that's a whole separate part of the problem, though, Ken. But that's part of the problem, and again, goes back to what Sam was saying, is that we're so risk averse as a people, right? And we need to be more comfortable with getting uncomfortable. That can't be overstated enough. If you are seeing problems and you're not an expert, who cares? You have common sense. You have a rational logic mind. You can identify problems just like everybody else. You can read studies just like everybody else.
You're not a medical doctor. How could you?
Right. We spent 2 years.
How dare you think your own thoughts, right?
We spent 2 years listening that if you don't have a medical school degree, you can't have an opinion. It was insane. So there's another thing to what you just said, AJ. The age has canted very largely to more mature startup founders. We need young people to do this. And I'll tell you what, we have raised this most recent generation are more risk averse, but we need people who don't have families and mortgages to take risks early. So they get to go up in a puff of smoke and go, wow, that sucked. Let's try that again. Right. You need guys in their 20s to do that. More mature individuals do have more to lose. Right.
Or you just get insane old people, that also works.
Right. Well, they're like, well, yeah, I'm going to die soon. It doesn't matter. Right. So it's like T. Boone Pickens when he did T. Boone Pickens went all in on windmills, all in billions. The guy spent.
Oh, right? Man.
And, but he
did all right.
He
did all right.
Pork bellies.
Okay.
Right?
Daryl Polston says some very good points I want to bring up. First of all, he says if exurbanizations move into C40 style cities, which are cities, there's a network of cities all over the world that are committed to climate change and being climate sustainable. How is OriginClear poised as a business model? Well, hello. We are all about recycling. This is a key area of ESG, right? So, and by the way, Daryl says he lives in a T. Boone Pickens wind zone. But we are right down the barrel of the gun there, because water, we are helping do something that the municipalities are never doing, which is using the water more than once. So that's number one. Number two, how does the OriginClear model fit into the future of work where 50% of the workforce is to be gig, contract, and temp? Does it provide for a more localized entrepreneurial business opportunity with long-term passive income streams? Well, let me tell you this. We had a theory that we could get that going with entrepreneurs during the pandemic. In fact, we had started something we call waterpreneurs. We even trademarked the term. And we had a big project. Here's the problem. If we are involved with retraining these people, oh Lord, it's not a business. And so that's when we realized we needed to work with existing clients who needed it. Now, where I think it's going to go is that these people are going to join the local, what are currently mom and pop water companies that are going to grow due to decentralization, and they will be involved with those. I personally don't think it's a great thing that 50% of the workforce is going to be gig or temp. And, for example, in our company, we're moving more and more towards employment because it's more predictable. The people working for you are more committed, and, it's people settle in for the long term. So I think it may well come back.
It's a reliability issue. A jack of all trades can be a master of none. If a guy is kind of juggling a couple of different things, he's not really present. And when you're building the next great unicorn, you kind of need people to be present, right?
I feel attacked right now, Ken.
What's that?
Feel attacked? No. It's okay, Jay. You'll be fine. You'll be fine. But, in Silicon Valley, they even did a policy where they said, okay, you can have unlimited time off. And nobody took it, right? There's unlimited time off. Netflix, go ahead, take time off, paid. But
when do you plan on doing that?
Right, exactly, right. But here's the thing, and it was very smart because it meant nobody was banking time off, right? So when they left, the company didn't owe anything. It said you have unlimited, right? It was very bright. But we actually have a time off program, a paid time off program. But what I'm saying is the tech companies had a workforce that was staying there. Larry Ellison famously said, if you're not here on Saturday, don't bother showing up on Sunday, right? And he used to show up in the parking lot in the morning when he got in to feel the engine hoods, to see whose was cold or warm, to see who had arrived early or not. That's the kind of world it has been in to this day. And I think it's going to be that way in water. James, right. AJ, you just have to clone yourself so each clone can focus on one of your many skills. Well, here's where team building matters, and AJ is going to be building a hell of a team. We are going to interview Josh Wills, our social media maven, because we want to start interviewing the team members. We have a lot of team members who've got some amazing talents, and we want to put them in front. So we will get that done. I want to thank everyone. I thought it was going to be short, but then again, we started, being in love with our own voices, and here we are, right? So
it's not a freewheeling discussion until we start cracking jokes, right?
That's right. I still heard a rumor there was a story about the South Pacific somewhere we need to explore. We don't have time for that, I'm guessing.
Different episode on the next episode.
But I can tell you this: only one thing. I was on this cargo ship. I was the first mate. I was the first officer, and gliding by the New Guinea coast. And I looked at the chart and I said, right here, Riggs, remember you were bored to death. Because we romanticize it afterwards. Oh, it was very, with the natives and all that stuff. No, it was slow as can be, but it was beautiful. That's a whole other story. Everyone, it's been a great pleasure. Thank you so much, gentlemen. I appreciate you jumping in and, shooting the breeze with me. Thank you, everyone, for joining, and I'll see you next week. We plan to have some news. More than that, I cannot say.
And they have no idea what you could possibly mean, so that's fine.
I'm doing the Joe Biden vacant look.
The jokes that come to mind. All right, you know what? Let's just listen. All right,
got it now.
Here's the hook.
Just got it.
Right. Okay.
Bye, guys. Have a good night.
Good night.
Bye.